Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss four things: why FIIs are selling in Indian equity market, when are they going to return, outlook of Nifty, and outlook of dollar rupee pair. Now, let us understand why FIIs have been selling in Indian equity market. If you see the chart, from the chart, it is clearly indicating that from January 2024 to September 2024, FIIs were investing in Indian equity and debt market. Net inflow in equity market was close to $12 billion, and combined debt and equity was close to $30 billion. Now all the problems started from October onwards. From October onwards, they have sold close to $23 billion, and in Jan and Feb combined, they have sold close to $12.5 billion. One of the most important reason was lower corporate earning. If you see the table, after delivering double-digit growth for the 4 quarters of FY24, in FY25 first 2 quarters they started giving very lesser return, close to -1 and -1.5%. Second reason was falling growth rate. After growing at 8%, 7%, last Q2 data of FY25 came at 5.4%. The entire reason for the same was corporates were not investing and government spending got reduced drastically. Third important aspect was reducing real yield. Real yield क्या होता है? If you minus inflation from the interest rate, it gives you a real rate of return. So if you see the table, India's real yield went below 2%. Generally, 1.5 to 2% is a great yield from last 1.5 2 years. If we are above 2%, FIIs invest in Indian equity market. So real yield went below 2%. Now the important question is when they will come back. Before answering that question, let us understand what are the factors which can bring them back to India. Now the first answer is our yields have started moving into the 2% mark. If you see from last 2 months, our real positive yield is increasing. At current point of time, our real positive yield is higher than US. Now let us see what is happening with corporate earning. If you see the data point, Q3 FY25, corporate earning grew at 5%, which was at -1.5% in last quarter. So corporate earning have started showing positive numbers. Now let us see what is happening with growth. Before answering that question, let us understand what steps the government have taken in last couple of months to boost the economy. So the first data point is government capital expenditure. If you see in the month of December, government have increased its capital expenditure by 95% as compared to last year. They have invested close to 1,72,000 crore. Last year at the same time, they have invested 88,000 crore. Now, apart from the government, RBI also supported in terms of monetary policy. They have reduced the interest rate. Second, very often they are trying to put liquidity into the system by doing different kind of OMOs and doing buy-sell swap in the forex market. So with all these efforts, our GDP data came on a positive side, but the question is whether this data is sustainable or not. If we go inside the GDP growth rate, we will understand that three heavyweight employment sector have contributed significantly and they have shown positive growth. So basically, we can say that this growth momentum can continue. So to answer the question whether the FII will come or not, probably FII can come in couple of months time. Now what is the outlook for Nifty? Let us discuss that. Before giving the future view, let us see what we have told in the past. In the month of September, when Nifty midcap was trading close to 22,363, we had given a massive downfall target of 17,500, which actually nearly achieved. It made a low of 17,560 kind of level on 28th of Feb. Now let us understand what is the view for Nifty for coming days. If you see the chart, RSI is technically in oversold zone, and whenever RSI have fallen below 20 levels and bounce back from that level, we have seen a good kind of recovery in Nifty. So at the current point of time also, we are expecting the same. 21,800 to 22,000 is going to act as a very strong support for Nifty, and we are expecting Nifty to move towards 23,000 to 23,200 in coming days. Now let us discuss outlook on rupee. As we have seen from the data points that there are some initial signs which are indicating that our economy is in a recovering phase, and ideally FII should stop selling in couple of months, and from there they can start investing in Indian equity and debt market. If they start investing in Indian equity and debt market, it is going to support rupee. Apart from that, global factors like crude oil price and dollar index are not expected to move on a higher side, which is also positive for rupee. So for the short term perspective, we can say that we are expecting rupee to move in a range between 86.80 on the lower side and 87.60 on the higher side. Now let us discuss strategy for exporters. Exporters should increase their hedge ratio between 87.40 to 87.6 kind of a level. Strategy for importers. Importers should keep a stop loss of 87.60 and wait for a lower levels of 87.10 and 86.80. With this, I will end my today's presentation. Jai Hind. Namaskar. फिर मिलेंगे next week. Thank you.